Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, the 17th of March, 2021. All right, my friends, we have a lot of new software we're bringing in so that I can get out my morning subscriber videos much earlier. As usual, new software, Ira Epstein, problems. It's that simple, okay? I will work through it and have it all done shortly. But there's a learning curve on all this, and sometimes the pieces don't mix and match. So you're doing this. The whole idea here is I want to shave off 20 to 25 minutes per day and get these videos all out even earlier than I do already. I'll record them at the same time, but I should be able to really get down the rendering and the posting time rather dramatically. So I'm going to do that. Did it screw things up today? Don't ask. I had my IT staff. They're not up with me when I do these recordings at 5:30 in the morning, so I apologize. But today was all about the Fed. And, you know, it was one of these events where I thought that it would be a big event, potentially. The word is potentially. I didn't think the Fed was going to make any changes, but that wasn't what it was about. It was about their forecasts going forward, and it was about the dot-coms. So on the dot-coms, you got 4 now voting people that are saying, hey, 2022, we're going to see interest rate hike, and you now have 7 in 2023. Those numbers are up from 1 in the last dot-com and for the 2022 and 5 from the 2023 period. So they're climbing. The Fed chair is not bound by anything. These are just thoughts, and things change along the way. Don't put more into the dot-coms than they are, but it gives you an idea. What the Fed did say is they're not changing their bond buying program. They're going to continue on until they don't need it. The Fed expects inflation to get up to at least 2% in short order. So they're looking for a bump from the COVID-19 relief bill. They're looking for a bump from all of us getting vaccine shots, from things opening. Disney announced today, April 30th, they're reopening under whatever guidelines, but they're reopening. Hotels are reopening. In Chicago, we have the opening of a brand new hotel on our Navy Pier. I don't remember the last grand opening we had of one, 275 rooms down there. People will go to it. The streets are crowded in Chicago. The shoppers are out again. You know, I can only speak about my city because I see that. But I'm hearing this elsewhere. It's not just humdum. It will be. As soon as we get that warmer spring weather and we're in the 60s and 70s regular, you watch what happens. And the Fed mentioned that we're going to see that. So they look for the inflation because so many businesses have shut down. There'll be demands on the ones as people go out to come back. New ones will open. I'm using his words. It'll offset the inflation pressures. And they don't see runaway inflation. That's versus a lot of traders that see a 3-4% inflation coming at you. Ray Dalio, you've got, if you're watching Bill Gross from PIMCO today, I can go on and on with the names that don't think that that is going to be the scenario. Okay, just points of view. I'm of the opinion a better economy brings with it higher interest rates and inflation, and I do think we will hit the 2% target the Fed thinks we will hit. What he said is we'll get there and then it'll peak out on you. That's the difference. Okay. Are they going to do anything about the rise in the 10-year note? I didn't hear anything to stop that. I didn't hear anything on the 30-year, the mortgage money. Not a word. And if you were watching that, you saw that the MBA mortgage money, the index fell 2.2%. The refi was down. What's going on with those housing permits? Forget the starts with bad weather. Permits don't rely on weather. They were down over 10%. Something going on? I don't know, but that number got my attention too. Okay, when we take a look at the market at GameStop, this happens to be one of the stocks that Bill Gross was talking about, and he said before he knew it, he went short, he was out 10 million, and now he's ahead 10 million. I wish you the best, Bill, but he's got more money than we have. And you can see how that market's just swinging back and forth here. Overall, the trend is still up. The market would have to take out this 172.85 to break that pattern. If it does, the first objective, 160.83. If it should rally, 303.72 could be a next upside target. AMC, well, you know, the news has got to be taken as good because if Disney can open, well, movie theaters can open, and you're seeing that the market's up. It is overbought. Don't think it isn't. You're not embedded. You're overbought. You're fighting at the upper Bollinger Band. Trend up, bias up, overbought. In PAVE, this is one of these markets that I still think the next thing we're going to hear is these infrastructure bills coming out of the Biden administration. And, you know, long term, I still think this looks good. If you look at what the market is right now, you've got a lower low, a higher high. You've made recent highs over the past 2 days prior to today. The market's backing off here. I see that. It's still over all the key averages. And if we look at the Bollinger Band, you're fighting right at it. You've been fighting at it. Now you're pulling away from it. Might be ready to drop back a little bit here if momentum gives up. The slow stochastic decides, in my opinion, what this market's going to do. Until the red line closes under 79, I contend these breaks get bought by the pros looking to get back to the Bollinger Band. And as long as it's embedded, they'll buy them, kick out, buy them, kick out, maybe even adding to their position till it's over. It's how you creep up on a position. THCX, you're back down to the 18-day average. That's the support line. This is the line in the sand. We are not in a trend. We have a lower low, higher high, overbought. Nothing there. In SMH, you've got the pattern of higher lows, higher highs. We keep hearing about the shortages. We heard it all day today. The car manufacturers and other manufacturers of other types of electronic items are running into it. You had an outside day up. In terms of the momentum, you're not overbought. I contend if you just broke back here, the pros will buy it until today's low is taken out, looking for that 252. Again, an outside day is a very important day. If it's taken out, it's often a sign of a trap for the bulls if it's an outside day up, and that can lead to a challenge of the closest moving average under the market or a Bollinger Band. When I look at XLI, I've been friendly this market. It lets you in on the brakes if you want it, and I'm still looking to see if you can get back to the Bollinger Band. Embedded reading still looks good. That's the industrial sector. Energy sector. We were saying this market's got a problem. It lost its embedded reading, right? Let's see. This is the day that it did it. When that happens, you often go to the 18-day average to regroup. In this particular instance, you'd already lost the higher, you had the higher high, but now you got a lower and low, and look what the market did. Thank you. That's the way I teach. You know, you'd think I draw these lines. I don't. That's how they're working out. In QQQ, you're very overbought. We've had a nice rebound, but the techs still aren't the place that people want to be. They're moving on, and tomorrow we'll get an even better idea of what they want to move on into. I'm not convinced it's the tech at this point, but let's assume it is, just for the opposite side. Well, then wherever that Bollinger Band comes in should be the resistance. You're very overbought. Support's right here, and you stay in an uptrend until you take out this 311.39, but that overbought condition, if I filtered that in as an algo trader, I don't think I've got my system buying. In the emerging markets, this is a great sign. Was this the break low? Is this going to prove to be finally that area where we get this consolidation of price and then the emerging markets versus the U.S. markets begin their takeoff? I don't know. I can just point out what's here. It's bullish. It's overbought. I look for stiff resistance at 77.22. In gold, the battleground's right here at the 18-day average of closes. I was looking for it to be hit. You did it yesterday. You had lost the embedded reading back here, and now you're there. You have an outside day up. I think the gold bulls will get enamored, and they'll be buyers now until you take out today's low. Why? An outside day up. That would break the pattern of everything. So you don't want to see that taken out. Potential target could be wherever the Bollinger Band comes in, probably in the 160s. The gold miner, still bullish. I'm looking for a major resistance, 34.66. Very overbought. The first run up, it's almost just going, as you can see, that chop affair higher, which is great. It is a trend. It is to the upside. Taking out today's low would be a problem there. TLT, I told you yesterday, I think the pros would be out of the markets in front of today. They went to the Bollinger Band anyway, so I'm happy as can be. There's nothing bullish on that chart. And last, FXE. If the market can clear 112.43, it might be a sign that finally this correction has run its course, but it's not a sign to go long. Nothing on this chart is that bullish at this point in time. Days like today, you know what markets were trading like mad? Stock indices. And guess what? These mini futures, they're 1/10 the size. The commission on them is $1 a side. So it's not expensive. I mean, that's what it is. The exchange fees are smaller. Everything's smaller. The margins are 1/10. The value of a point, instead of a full point being $50, it's $5. So if you're looking to get your feet wet and you like the stock indices, and a lot of people do, you know, they get tired of the ETFs, or they think they can get a pure play in one of the stock indices versus getting an ETF that typically has more of these other things in it and fees and so on. This might be the way to go. We offer you this special. It stays just this way. We'll help you get your account set up, $1 a side. If you can't afford that, what can I tell you? I mean, futures trading is not with the Robin Hood groups. You know that. Try to place a trade with them. You're not going to be able to, all right? They're not futures brokers. And the firms that are futures brokers, they have different fees. There are fees. We don't get money back from people taking your order and then looking at it and parsing it out and getting paid to fill it. That's how the discount-free commissions work. I'm not saying there's anything wrong with it. I'm not saying it hurts you, but I am saying it isn't free. Okay? Somewhere you're going to end up paying for it. We're just up front with it. How do you find out more? Well, if you go to www.iraepstein.com micro, the word, type in micro after it, the whole page will come up, or you can call my staff. They'll help you get everything you need. I'm Ira Epstein. You have a great day, and I'll see you tomorrow.